The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this February the 4th. And what's really important about this particular day is that through the rotation, there has been a move back into the NDX 100 after the Amazon chaos the last few days. And I would just say that that in essence is supporting the market, but there are a lot of overhead resistance levels that have to be overcome right here. Let me just look at the E-mini for a minute. Yes, that looks like it's had a very nice counter-trend move from earlier on when it was weak. E-mini's holding very nicely, but I think we're in for a little bit of a rest period here in the noontime hour, Eastern time. All right, let's get to the nitty-gritties. Here's the Dow. It's in the Chapman Wave inside track repellent zone. Above the green line would be very positive. In other words, in the 25,250s, holding there, that would be very good. Right now, we'll see how it's going to be able to hold against this resistance. Let me show you the resistance, automated Chapman Wave resistance levels. Right there, 25,231, 25,498 above, and probably, almost a couple of hundred points above. But we're in that area where there are a lot of automatically generated resistance levels that earlier on were just snapped right through, even though the market stopped for a day or two, it just wasn't strong enough to hold it. So we'll see if this is going to be almost like a target zone. Now, I had a couple of questions, very important questions. I think they're very good questions, and I've been trying to answer them over a period of time here. And I'm just going to say that within the context of what I'm looking at, the V-shaped pattern. So actually, let me just go to the question now because it pertains to almost every one of the charts. What is the question? In hindsight, watching these V bounces challenge our nerves from every bottom, how do we come to grips on knowing when a V bounce has legs to jump, like the recent move versus bounces that fail? So basically what I've been talking about this since January, early January, when we turned around. And I even type it for my opening call subscribers, I type in, where can I show it? Can I show it here? I haven't got it right in front of me. What I do is I type in, I'll do it right on the chart. I go V-shaped pattern, or I go lowercase V-shaped pattern. Why? Because I'm very visual, and that to me explains it exactly. Uppercase V means that there's a really strong rebound. Lowercase v says you can go to the next upper resistance level, but most importantly, time and price are involved here, just as on the way down. So for some of the indexes, if I go to the IWM, I'm just going to do charts for the moment. This is not Technical Friday. To that rebound to the 146 area, after it cascaded from mid-December down to 125.81. This is the Russell iShares 2000 ETF. That was a really good rebound. And then my analysis and my template is always, if the stochastic gives a Chapman wave to the MACD, stochastic to the MACD, gives a Chapman wave squash. This almost gave a squash. It was a close resemblance. And that's usually where the price of the whatever we're watching of the tradable rallies very sharply together with the stochastic as the MACD makes this huge U-turn and then crosses positive. If in fact you're only in, say, leg B and you're getting close to the left side former peak that would have been a resistance point, and it's done it in the same number of days to the upside as you got to the downside, then you're in an uppercase V. The uppercase V can evolve VV over a period of time. But the most magnificent one is where you got this really sharp, like in the weekly chart of the IWM, that is an uppercase V. And it's done very well, V well. And that says that there's a really good chance that the support levels are now very clear. In this case, the 144s, if that gets, it's at 150.35 of $1.17. If the 144s in February gets taken out, watch out, because the 141 to 139 area will be very important support. Within the context of the V-shaped pattern, what I do is as you're moving to the right, because every bar moves to the right, if you're starting to make just only slightly higher highs, then it makes a very beautiful arch formation. Well, this one isn't a beautiful, it was a beautiful one until Thursday, Friday, Monday. Yeah, until Thursday when it snapped out, had a beautiful up candle, little doji candle on Friday. That was a hint to say, be careful, we're getting a little bit of resistance. And then a really strong candle today. That's saying, you know what, the arch formation could falter and you'll have to take it away because it's now going to be more like a V-shaped formation. Let me explain this in English. A V-shaped formation, you want time and price to as closely match the left side number of bars down to an important left side peak, in this case, peak right there in December of 146.76. And you want to get there in 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, 9, 10 bars down. You go on 1, 2, 3, 4, 5, 6, 7, 5, 6, 7 went sideways. 8 broke out. 9, 10, 11, 12, 13, 14, 15, 16, 17. It took 18 bars to get to that left side high. And that says this is a fabulous rally, but it's not as sharp as the way down, but it is methodical and is making stair-step moves to the upside. This is very good action. So that puts it into the category of not a lowercase v that went to an arch formation, started to test a bending over, roll over, inverted U. And that says this so far is very good action. And that's the reason why I keep saying, I think that the low that was made in December is pretty much a really important low. It's probably the low, and somehow we're waiting for a low to come later on. And I think it could be coming from higher up when a lot of bad news comes out, but the technicals have already done their job. All right, I don't want to go to the break. I want to go right now to, so I did the Dow, did the S&P, so I'll do it again. Here we go. The Dow is up, let's see, 19 points at 25,083, the high of 25,193 on Friday. That could be taken out. That became a leg D. And then I have 25,250, 25,290s as the next, let me just double check here, as the next written resistance in that trend line. Yep, trend line resistance there. And the support under 24,920 says, starting to have a little bit of a digestive phase, but we're not having it right now. S&P, SPX.X, break coming up. S&P is up 7.5 at 27,014. Has it just? No, it hasn't yet made a new recovery high. The high of the 27,1666 on Friday. Today's 27,1460. So we're a little bit under that. I'll be right back straight after these important messages. Dow's up 25, S&P's up almost 8.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So let me just show you the automated resistance levels of the Qs. The QQQ at 169.05, up $1.62, has resistance at 167.65 or 168.75 or 167.82. So it's already surpassed two of them. So we're going to be watching this very closely because it's right on the 200-period exponential moving average. So Google comes out with earnings. Google, G-O-O-G. I'm still going to say Google, even though it's Alphabet. Alphabet trading at, oh, look at that, trading up 12 at 1123.55. I've got this as a leg E at this particular point. Yep, it could go higher. But a lot's going to happen on what they say. It's really a tough one for me because they're in so many different areas, areas, in fact, some of us aren't even aware of. And how they monetize it, for me, is a little bit of a mystery. But meantime, back at the ranch, it has done very well. It's way below the 1273 high of July of last year. And then it's way above the just under 980 low that was made back in December. What was it exactly? 970, sorry, 970.11. So let me just type that in, 970.11. Trading right now at 1123, pretty good, pretty good. And I'm just going to say that within the context of what we're looking at here, that weekly chart has improved. The stochastics at 78%.99, very close to 80%. The MACD's crossed positive, had a nice price move. This is actually not leg A, it's leg B. I love to see a leg B in the weekly chart with the technicals improving because that says, especially over a previous high peak, and that peak was the one that was in December of 1124.65. So far, this is very good action, good repair action, let's just say. But if there is a move after hours where there's a report and with all the information they give in their conference call, whatever it is, if there's a move into the 1145 area, I'd say that that's really nice. That can hold all the way through tomorrow. That's very good action. If there is a move that takes it below, let me just be very clear about that. Not the gap. That gap can't happen in just one session. It'll have to be horrible, and they'll have to have the outlook. And I can't see why would they give a very ugly outlook. Yes, it would be under 1,095. That's just way, way, way lower. I'm just going to say if there is a move under the candle of Friday low, 1104, let's just say if there is a close under 1100 in the next 2 days, I'd say, okay, time out. And that could correspond with many of the stocks just deserving a well-earned timeout. Let's now go to gold. Gold was down earlier. Where is it now? It is now up. Oh, that's not up. That's corn continuous contract. No, I didn't mean that. I meant GC, not C. GC is down 4 at 1318.1. Made a peak D top at 1331.10. The whole aspect of this, the framework, the how can I call it, the schematic of this move from 1280 to 1331 suggests that there should be some givebacks testing the 9-period exponential moving average. It did today of 1312. I wouldn't be surprised if 1307, between 1307 and 1312 is going to give us huge clues as to what's going on. Short term, I do believe, I've said to subscribers, I think gold is somewhat overbought on the shorter term. Silver as well. It's come back a little bit. Silver is down only 0.05 at 1588. Earlier it was down at 1568. But I do think that tested the 14-period moving average, the black line. I think it's going to test it a little bit further based on the pattern I'm looking at. And that would say that the dollar trading at 95.85 of 27 cents, up 2,700, whatever they say, up 0.27. Is testing the 14-period moving average, went above it, holding it right now, and the MACD hasn't turned up yet, but it is improving a little bit. Stochastic just crossed positive today, but not a very strong stochastic. It's at 29%. So I'm just looking at this. I think this is a counter trend rally within the counter trend intermediate term pullback on the weekly, on the monthly's greater bull phase. Ooh, did I say that correctly? Short-term bounce within a more intermediate-term consolidation within a much larger up move. There you are. That's the dollar. EUR USD. Let's go to the EUR USD, the euro currency, dollar currency pair. Yep, just in that trading range. I said it just doesn't look great on the weekly chart. Monthly chart doesn't look very good. It could move very quickly at some point above 1.156, but it hasn't yet. It's at 1.143. And let's look at the USD JPY. I'm getting close to finishing my little preamble. Yep, made a leg D. Oh, that's very good. That's good for the dollar. Look, the yen is rallying quite nicely. It's up 0.44 at 109.94, and there is a lot of resistance coming up. Can it get to 111, the 200-period exponential moving average daily? Yes, it can, but it can't afford another red day. It has to have at least 2 green days, and then it can have a little bit of a sideways action before it tries to pop there. Next question I had was, could I look at high-grade copper? High-grade copper right now is up. Oh, it was down earlier. We actually do have a copper stock that's up 1.26% today. But the day is young. This little thing can move anywhere. So copper so far is actually much better. The weekly chart actually improved with 1, 2, 3. This is attempting the 5th green candle in the weekly chart after that spike low down below 2.54. Now what we're looking at is we're at 2.79, up 0.02. I like this action. I don't know how long it's going to last, but it goes together with what I would like to see in the home builders, the HGX trading right now. That is down 258. This is D, this is leg E. For my subscribers over the weekend, I showed them the weekly charts of this and wood, which is the iShares Timber and Forestry ETF. Both of them had really good moves to the upside. And now it's just testing the 200-period moving average, the HGX Philadelphia Housing Sector Index. 279.73 is the orange line, 200-period moving average. We're just under it at 275.39. We touched that on Friday. So just a little consolidation after a really good move. Got a couple of things I want to look at here, and then we're wrapped up. We can go to questions. Crude oil's now trading down. It had a higher high today. Then Thursday and Friday, and now it's turned down. The MACD is very good, but just showing the histogram slightly dipping a little bit. Stochastic's very weak, not very weak. It is weaker than it should be at 77% rather than in the 80% level. Weekly chart a very nice rebound in a leg A. So that's good. And here's the V-shaped pattern that was very strong in the crude oil, going back to the high that was made back at 55.06 in the continuous contract on the 4th of December, plunging down to 42.60 December the 24th, and then moving back very close in a nice V-shaped pattern with the MACD very good. Stochastic's already used up its energy, and now it's pulling back. So that says, I got this visual picture in my mind that's so clear. How can I explain? You know, when you're skiing, you do one of those moguls, and you're coming down quickly and you just touch it and you sort of lift up, but your whole mindset is still going down, and all of a sudden you're lifting up before you come back down again. That's kind of what it's like right here. Wow, did I explain that? Well, I did, but I'm not sure you understood it. All right, I'll be back. Basil Chapman, Tiger Conditions Hour, Dow's 20, up 28, S&P's up 8.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the TLT, which is the Lehman 20-year Treasury Bond ETF, is trading at 122.20, down 76. That would imply that money is coming out of bonds and going into stocks. And also the way this arch is formed, this is quite a steep arch. In other words, a lowercase h level. So that says to me, while I'm anticipating that there could be some kind of a pullback shorter term. I've got to monitor this very carefully, because until money comes back into the TLT, with the TLT rallying into the 123.30, 122.30 to 22.50 area, suggesting that there could be a retest of the 123.66, but 123.86 high of the 3rd of January. Let's see what happens. The day is young. If by the end of the day the market actually starts to pull back, because there are a lot of resistance levels, and it does pull back, and at 122.23 right now, suddenly you're looking at 120 point, what would be a good number? 122.58 to 120.72, then I'd say, hey, yep, this could really be a little bit of a breather coming up as the market decides it needs to re-energize for another move up. And I'm suspecting that if there is a pullback here, but it has to be unified between all the indices at the same time. I can't see this rotation going on. As long as there's a rotation, there's something that's going to move up and something that's going to move down a little bit. I want to see a unison pullback. I don't think this is the big pullback. I think it's a pullback. I think there's another chance of a rally, another up spike, what I call the rogue wave to the upside. And then I think we start to see, and this could take quite a couple of weeks into February, before later in February, I'm not sure if it's later in February, maybe early March, I think then there's a deeper pullback. That's my thinking. You know, you got to have some kind of template, some kind of modus operandi to work from. It's kind of what I'm looking at. Okay, so I'm finished with those. Now I wanted to show you a couple of things that I was looking at over the weekend. Wow, I wonder if I can just find it here. Give me 1 second. It'll be under, there it is. Okay, so here I am. I'm going through charts after charts. You know, I do this every once in a while, and I enjoy it, because it's it really tells me a lot about the overall market. And in this particular instance, I'm just trying to get back to the top of the list. There it is. Okay, so BEAD, B-E-A-D. B-E-A-D is this is in fact B-E-A-D. This is why am I making BEAT, B-E-A-T, and this is what is it called? Oh, look at that big move today as well. That is biotelemetry, medical devices, heart monitoring. I'd mentioned this quite some time ago as being a leader in the Investors Business Daily. It just broke out. I'm calling this F for now, but my thinking is that probably I'm going to have to rename it in the weekly chart. I'm calling it F for now, but probably have to rename it in the monthly chart as well, because it's a leader and it's doing fantastically. And most importantly, let me just see if this is just an extension or whether that was peak E. Yep, that was peaky, and I'm calling it F. So I've got F in the daily, F in the weekly, and F in the monthly. And I'm absolutely sure I'm going to have to rename these things because they are so strong. But it does say that at all-time highs, this is still a leader. It was number one in the Investors Business Daily top 50. And look at it breaking out today. BEAT, biotelemetry, up 4.91 and 77.25. It hit beautifully the secondary Chapman wave. No, it's a tertiary. No, it's the secondary one. Left side, right side price time match to Friday, and today just broke out to the upside. Really nice action. Next one, I wonder if I can find it right here. Leaders. Oh, they've picked it up from some number. Coop was one that I was looking at. Coop is Cooper Software. Look at this, spikes again today in leg E, breaks out in the weekly chart. See, the whole thing about the Investors Business Daily is that they give some fabulous stocks because they do an analysis based on volume and based on PE, based on just many, many factors, based on technicals. And these are the stocks that act the very best in good times. And unfortunately, in the worst times, they give you the deepest corrections. This is the good time. Look, from the low of December, what a spectacular move from about 50 to 92. Well, no, sorry. From, about 53 to 92. I would say that's a pretty good move. All right, question in the den is, Basil, can we look at the TVIX? Yeah, the TVIX is down at 37.36. This is a position that we had. Different people at different times, because some people are able to trade pre-market and others can only trade from 9:30 to 4 o'clock. So we took, it's at 37.35. We got in the 30, either the 40 or 39.5 area. Took $1.10 loss. It's reasonable when you're thinking that this is, we hardly ever trade this. I did it only because I was anticipating some kind of a move to the downside in the general market. Hasn't worked out, hasn't really broken down, but at 37.35, the MACD and everything is pointing to the fact that it is getting really close to some kind of a bounce. Don't do this unless you have absolutely very tight stops. Don't hold it because you think you're going to be right. Going to be right means that you can go from the 40.50 area to the 37 or 36. That's a lot. That's a big percentage for nothing. Rather just take tiny little losses, and when you get it right, you're going to much more make it up than those little losses, than the bigger loss if you were to hold it. So don't do that. And right now, I'm just saying, I might or might not give it another chance. The fact that the NASDAQ is running quite nicely means that we're still in this rotational correction. So I don't want to mess around. I'm just going to say to you that the TVIX looks to me like, I don't know if we're going to test the low of the 3rd of December at 33.86 as we ran into that low. But I do think that was December the 3rd, right? The high was on December the 27th at 86.50. I mean, look at that move, 32 to 86. I would say that's a pretty big move. I don't see a move like that coming yet. I do see a move coming, but not one like that. So just be careful for subscribers. I might give you a trade on this. We've had our one shot. It was a good shot, a good attempt. It was early. I don't know if I want to. I don't want to lose money on something that I don't feel comfortable with. There are other ways that we can play this. So just TVIX is the VIX. The VIX is trading at 15.92. Finally, we're not in the 16s, but in the 15s. So that says to me, now I have to be a lot more careful, because once you get back to the 16s, especially the 15s, this is the median for me. This is what I always look for. And I say, gee, in the 15s, 16s, there should be an upside bias. So I'm not going to fight this. I don't want to fight it. I don't want to be involved in anything that has the potential to hold. And the VIX at this point says, if you rotate, and if Google comes out with a good earnings number on this afternoon, I'm just going to say to you, let's be very careful here. I've got a break coming up. Next question was MJ, which is the ETF alternate harvest. Whoa, what a big spike, up 37.66 at $1.80. I'll talk about it when we get back. Up 5%. Good for us. We're in it in the 29s. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, we're back. Just before we go back to the MJ, I am, for those of you in the den, and you saw that I put a peak F there on the 2-minute chart. I put a peak F down arrow on the 5-minute. So it just says there's that consolidation that we were looking for. And you can see this is the deepest consolidation, not very deep, but it's the deepest one we've had so far. But it's only peak B in the 10-minute chart. So that says, you know what, we could recycle up within the next 30 minutes or so. We'll see. Okay. So MJ is the Alternative Harvest ETF, Cannabis Sector 37 ETF, 37.87 up 201, up 5.60% today. In my analysis, which I give, this is what I give my subscribers every day. You know, this even over the weekend, I gave updates, etc. for Monday. Let me just show you something here. Where did I put it? If I can find it, I'm just going to scan right here. Not that one. Not that one, not that one. What is that? No, it's not that one. Not that. Oh, there it is. Is that right? Okay. I'm just trying to find so that you can see what I do for my subscribers. Did I do that? Oh, no. Did I just bump it off because I needed some room? There we go. So just trying to find the headlines for these things. Why doesn't it show me the headline? Oh, it did the others. All right, I don't have it right in front of me. I thought I did because I know I did it for subscribers over the weekend. Did that. Maybe I didn't do it this weekend. That's interesting. I did everything else. All right, sorry. I'm just, I wanted to go through the charts that I'd sent, and I just don't find it right now. But what I had, and what we were looking at, and one of the reasons why we were long, is that we were looking, you see the 36.97 peak A minus that was back around about the November the 11th, 12th. Look how the price came down, came trough A, trough B, trough C. These are the downside little V-shape, inverted Vs. And then at 23.01 on the 24th of December at trough D, it makes a real nice low. We got in on the January the 11th and the 29 area. So that was still, a good percentage above the low, but we got in there and we've held it since, and it went up and then went to peak A, 31.50 something, 53, and then it went sideways. Then it made a B, peak B, and then it pulls back, and then it goes C, and now today it's gone to D, where? Above. Bless you. Excuse me. What is it about I don't sneeze. I never sneeze except right here. And in the sun, we have the Chapman wave gene that says when you walk into the sun, you sneeze. That's an eye thing, something or other. All right. So we've gone to a leg D, and this leg D is really strong. And it is above the 36.97 peak that was made on November the 7th. Oh, it was the 7th at 36.97. And we're at 37.92. This is really good action. And the 120-minute chart, which looked as if it was about to make a leg D, it did make a leg D, and now it's extended that D, and it says the technicals are still very strong. On balance volume says a little bit toppy right here. One of the reasons why I had, well, let me just talk about this because that was a question. This is looking really strong. I have a target for this in February of the downtrend line that came from the high of 45.90 back in September, the week of the 21st. Then about 4 weeks later, it makes a slightly lower high in the 44s. And I joined that, and it comes out to about this month, 39.74. 39.74. Can it do it this month? Sure it can, but that would be my target. I'm going to make this green line. I'm going to show you a technique that I use. Green. I always press the little button that says new parallel. You almost have a parallel thing that you can make as well in your software program. And if not, then you just need to draw a trend line. And all that trend line is now, it's going to be pink. And that says round about the 38.20 area. It's 38.50, let's say. That's where it starts to enter the Chapman wave inside track repellent zone. And if there was a move, a closing price above at any time this week or next week, above, I would put it a little bit higher. Let's call it 40.40. That would just be absolutely fantastic action because now you've raised your base. Next thing. The MACD is cross positive in the weekly chart, the stochastic. Now, what I had said, and one of the reasons why there's another cannabis stock that we had, which I'll explain in a moment what we're looking at, is when I see the price start to follow the design of the stochastic and MACD, it says to me, be careful, because these are waves where price follows the waves exactly. There are no divergences. What I mean is that if you follow the price, say this 120-minute chart in the corner right, you see how the price is held beautifully above the 9 EMA, and here it's held. The green line is the 9-period differential moving above the slower 26-period moving average. And it kind of conforms very much to the price movement. If you had to close your eyes and you looked at this green line, it would look very much like that. Well, when I start to see that both indexes, both technical tools, the stochastic and the MACD, are actually swooping up and swooping down and swooping up and swooping down and not giving one a steady. Look how beautiful and steady this is in the daily chart. Look how steady it is, above 90%. It's at 93% here in the daily, and the unbalanced volume is still screaming to the upside. And look how beautifully the 9-period differential is. This is really powerful. This is a very powerful move. So it says that support to get the green line, the 9-period differentials across negative, you'd have to have a price that takes it down to from 37, 38 right now. You'd have to go down to the 34.20, 33.10 area and do it very quickly to get that negativity. And I don't see it happening very quickly. So my thinking was, when we were over here and we're getting to a D, that there was one particular stock we had in the cannabis sector, and we got it nicely, and it ran up in the same day, and then it came back, gave a huge percentage, 6 or 7% gain intraday, and then it pulls back, and then it goes under our entry point, and some people either didn't get it or were stopped out if they got it either pre-market or post-market, but they got it at a decent price. And then on Thursday, it did the same thing. It ran up and then came back down again and then closed okay. I said, you know what, if it does it one more time, I want to raise the base. in my haste, because I was getting close to my posting time, I just raised it a little, and I never go from, in this case, we're in at $7.02, and the stop was like $6.56 or something like that. I raised it and said if it hits $7, I think, and 32 or 34 cents, let's raise the stop to 702 or 703. Meaning, I really wanted to do 6.93, but I just wrote it too quickly. So we actually got stopped out. Now this darn thing today is up again, and it's not giving back anything. And it's at $7.73. That's tough. Well, I mean, it's up 7.8%, but we have the ETF, which is up huge. I mean, this is up 6%. I'm not complaining. I'm just saying it was a little dumb. I have got emails to say some people didn't.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So just to show you here, the E-mini still hasn't taken out the high that was made at 27. What was it? 27.1375, and it's trading at 27.14. So we've used up time. So that's a correct use of my down arrow with a peak F top. MACD's pulled back, stochastic. Now it's getting ready to try to rally, and it could start the rally very soon. A peak F in the 5-minute chart and only B in the 10-minute chart. So we could see some higher prices. Now, let's get back to our story. And we were looking at MJ, and that's basically what I'm looking at. And it says that support in the 34 to 33 area should be very strong. It'll take a little while longer before there's enough selling pressure, I think, to start to break under 32, but it depends on how high we go. This is really nice action at this point. Now it's up 2.28. at 38.14. Yes, so the answer is it's acting very well. I like it. Oh, you have no position. But you have some components. Well, if you have some components, you should be doing very well. What would I do with this? This is really tough because I wouldn't. I tell you, it's not tough. If you aren't in it and you're looking out further at 38.19, you could actually start just a small little position. Your best position would be in the 34s if risk reward. But right now, it's just to get started and have it. But if you are in the components, then I would have patience. Hey, wait, you don't have to get into this. You don't have to take a loss on a position, your major MJ, if your others are doing well. Why? Because when this thing starts to pull back, yours will probably pull back as well. There are a couple of latecomers that might move a little higher, but that's the way I'd look at it. Have patience. You'll be able to get it. We'll do it again tomorrow if I'm asked. So, folks, check out my opening calls, my daily newsletter. We've had some really good trades and, of course, a couple of misses. Everybody has misses. And today we have one that's up 1.80%, one that's up a little bit, 1.24%, and then this MJ is up just today is up 6.55%. So yep, there are some nice winners, and the one that I think some people still have, I know some people still have, but we're officially out of it, is up 7.13%. Oh well. We'll be back. Stay tuned for Steve, stay tuned for Dave, stay tuned for Tom O'Brien. I'll be back tomorrow. Have a great day. Check out my opening call. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.